SIG, up really strong. But shares had been cut in half this year. Pete and I always like to put things into context, folks. And you could just cheer this one and go, yeah, look at it, it's killing it. And yet it was killed. I mean, the stock was double the price that it is now, Pete, and traded down significantly. Well, maybe it's making a pretty good comeback. I mean, none of us that are rooting for it would say that's a bad thing, but my gosh, this is something that you would certainly rather see this thing slow and steady to the upside rather than boom, boom, boom to the downside. But maybe it's a sign people are coming back into certain retailers.
Yeah. Early in the year, they slammed this thing, and it got pushed around a little bit, John. It's interesting. They're also raising the dividend by 10%. So that's another thing that's pretty interesting. Everything that they put up, again, was unbelievable, not just satisfactory, but outstanding. When you look at some of these numbers, strong forecast, as you mentioned as well, as far as the sales go. The full year, the strength that they got that as far as the sales, that was ahead of things. So, yeah, across the board. And there's some big shorts in this one as well. You always want to look at the fundamental side of these things and what could cause this thing to go not just 20-some-odd%, but like you said, this is a stock that when you look at the 52-week low and the 52-week high, we're talking about $45 up to $112. We're only sitting right now at about 58 or something close to that. So is there room for this thing to go a lot higher? Hell yeah, there is. I mean, this thing, under the right circumstances and any good news, this thing's got plenty of room to get a little bit more of a squeeze, John. And when I look over at what the shorts are looking at right now, that could get ugly pretty quick for the shorts, but pretty damn nice for the folks that are actually going long or have a long position on.
It's not an option.